There are three things, maybe even four, going on right now that led me to the notion that the United States is becoming a fortress that is increasingly self-sufficient for a variety of different reasons. First and foremost is the energy revolution, which here in this state you are intimately familiar with. The fracking phenomenon that's taking place was actually underscored today in ways that seemed absolutely unthinkable 5 years ago. 5 years ago, we were importing more than 60% of our petroleum needs from overseas. Today, that's moving below 25%. In fact, the government announced today that domestic crude oil production is at over 9 million barrels a day in the United States. Saudi production is 9.6 million. We've caught them. And in fact, in total energy production, we've just surpassed this month or last Saudi Arabia. We're a bigger producer of natural gas than either Saudi Arabia or Russia. And that's been reflected in prices. For those of you who are watching today, oil fell as low as $74 a barrel, reflecting this immense supply glut. Iraq is actually producing more oil now than it has in quite a number of years. Libya is back online. The Russians don't know what to do. OPEC has no interest in cutting production. And there may be some geopolitical component to this if the U.S. and the Saudis are aligned to enhance the effect of sanctions on Vladimir Putin's government. $74 oil will most certainly do it. Their national budget prices oil at $100 a barrel on which they base their revenue assumptions, and they are falling sadly below their targets. So there could be both increases in supply, slowing demand overseas, and some geopolitical component that is driving down the price of oil. But in that, having said that, the amount of employment that's been created in the fracking world, over 600, maybe even 700,000 jobs in the energy sector in the last several years. High-paying jobs. You're a petroleum engineer coming out of college today, you're going to make between $80,000 and $100,000 right out of school. The Colorado Mining College has refocused on fracking as opposed to gold mining. And we can see why. Gold has gone from $1,900 an ounce down to $1,100 and change. Oil's falling in price. Some people worry that if it falls as it did in 1985 and 86 and falls precipitously, that the cost of production, particularly marginal production in the fracking world, will be equal the current price, in which case you might see some slowdown in production activity. But that may not happen. And in fact, there are new technologies that are lowering the cost of this type of energy revolution every single day. So it's possible that the Eagle Ford, the Permian Basin, the Bakken, all these different formations may continue to yield extraordinary amounts of energy for years, if not decades to come. And while we will never be necessarily fully energy independent, we are becoming increasingly energy self-sufficient. When you look at what's happened to the trade deficit, it is now 2.3% of GDP, principally because we're actually exporting oil to Canada, which had been previously exporting oil to us. And Canada has a glut of oil. Mexico has just opened its energy sector to foreign investment, which would include large U.S. multinational corporations who can start fracking in Mexico. We can argue about the environmental impact at another time, but this is what's going on, and it's having an enormous impact on the economy. 5 years ago, we talked about peak oil. Today, we're talking about a supply glut of crude oil everywhere on the planet. The knock-on effect there is that it's bringing manufacturing back home. It's about $120 billion in new plant and equipment spending this year, a lot of it in the manufacturing sector. The cost of natural gas in the United States is about 1/8 of the cost anywhere else in the world. We are seeing German companies open up gas plants, petrochemical plants, and other types of manufacturing operations. Textile companies, the first to leave the U.S. during the period of globalization, are now coming back. It's a different type of textile business. There's still software and robotics, and it's less labor-intensive than it once was, but we're actually adding jobs in that industry instead of subtracting. And the manufacturing base in the United States is now the second biggest in the world. That is a radical change from where we were, again, just a few short years ago. And when you look at technological innovation, 3D printing, and a host of other things that are taking place in the technology sector, again, high-paying, high-value-added jobs, the U.S. economy surpasses most other parts of the world in that regard. So we're actually in quite good shape. Now, I spent a lot of time arguing with people on CNBC about this notion because there are still the gloom and doomers out there who keep saying we are poised for another crash. The dollar is going to plummet. Interest rates are going to skyrocket because the Fed ballooned its balance sheet. And so as a consequence, there's no way that this is sustainable. Well, the Fed's never going to sell the bonds on its balance sheet, just to start with. The Fed has remonetized, recapitalized the entire economy. The people who argue that the Fed has just gone from an $800 billion balance sheet to a $4 trillion balance sheet fail to take into account that at the very depths of the recession, we had lost $17 trillion in value from both equity prices and real estate values. The Fed was just blowing up the balloon again. This was not an irresponsible reaction to what transpired. In fact, it was the one thing that the government could do was to take on the load in the public sector that the private sector could no longer bear. And it was that laid the seeds for recovery, and now we have these other things going on that are extraordinarily potent and are leading the United States to become economically self-sufficient. When you look around the rest of the world, Europe, I don't want to call them a basket case, but they're in recession. China, you can say whatever you want about 7.4% growth. If you look at electricity output in China, it's about 3.5%, which equates very closely to GDP, real GDP. Japan's not growing at all. In fact, they're still in recession. They're trying to re-stimulate, but they're not growing briskly. When you look at Russia, they're on the cusp of recession. The ruble is crashing, and they're intervening every day to support their currency. $120 billion so far this year has left Russia in capital flight, which is 5% of Russian GDP. Most of that money is going to London and the United States. Chinese money coming to the United States. We see that in the value of the dollar, which continues to increase. If we were the basket case of the world, the value of the dollar would not be going up. Interest rates would not be steady. The stock market would not be at new all-time highs. And in fact, many of our most innovative companies are sitting, Apple Computer and a host of others are sitting at new all-time highs as well because they continue to innovate, they continue to outperform. And I don't think that message has been stated clearly enough or emphatically enough over the last several years.